Ladies and gentlemen, welcome back to Daily Bread. Glad to be back. It's been about a month since I did an episode, and I'll get into a little bit why. But glad to be back. Glad to see you guys. A lot has happened since the last episode. The last episode, to jog your memory, was the very week before the BlackRock ETF news, and we were pretty much just about near the bottom of Bitcoin, and we were getting hit with all of the SEC, Coinbase, Binance, all that FUD with the lawsuits and all that stuff. And it's funny because in that episode, if you recall, I was saying how it's very interesting that they're doing this, and then the Soros, the CEO of Soros's fund, had come out and said, "Oh, but we see a future in crypto," and I was. Basically, I'm gonna give myself a little pat on the back here. I basically called it. It happened much faster than I thought. But I said the institutions are coming for your crypto. Don't sell your coins to them. And then the very next week, BlackRock announced its ETF, and away we went. And it's been very positive since then. But I wanted to talk a little bit about one. We'll get into all the ETF stuff, whatever. There's nothing like crazy to say about that. More just like big picture, I think. The market looking forward. I've been super active on Twitter. I just haven't been making videos or podcasts. I post a lot about how like we are in an uptrend. If you look out and you zoom out on your trading view and go to the monthly candles, you can see that we are now in a 6-month uptrend that started in January this year, and now obviously we are in July, and so June closed with a great monthly candle, and we basically had 6 months where we are just consistently making higher lows and higher highs. We haven't quite made a higher high on this one yet, but obviously the trend is just starting. But basically we're in a high time frame uptrend. And that's been confirmed for like 6 months now. And so I wanted to talk a little big picture. Obviously, we have these bullish catalysts. Just today, I'm recording this Wednesday, July 5th. Larry Fink went on Fox Business News and called crypto and Bitcoin like a digital gold, an international asset, all these positive things. So we'll get into all that. But I wanted to talk a little bit about why I haven't been recording as much, and I kind of thought it'd actually be helpful to a lot of you probably. And the answer is very simple. Just one, obviously not a lot was going on. I feel like I haven't, not a lot's changed other than the ETF thing. I mean, yeah, it's been cool. We went up, but like, it's been still a pretty quiet market overall. It's not like a ton has happened in the last few weeks. But second, I just kind of have been in a bit of a trading rut. I haven't been performing as well as I was in the beginning of the year. And so I really just wanted to focus in and hone in on my trading and less on everything else. And part of that too is that, I come on here and I talk about trading and things, and I felt like I didn't have anything to say. It's hard to come on and talk for an hour when I'm not even trading that well right now. So, or I wasn't in that time. I'm getting back on the horse now, but I was having a little down stretch, and I kind of, you lose motivation to like talk about trading when you're in a downtrend, right? Or in a personal downtrend, I should say. And so I wanted to talk about like that part of trading, because a lot of trading is very sexy, right? It's very like, oh, you post the big P&L, and everybody loves to post the big winners, and I'm totally guilty of this, I always post the big winner on Twitter when I called this or whatever, but, not everybody shares their losers. Not everybody shares when they're not trading well, when they're in a rut. And I think that's like the actual important part, right? Because the majority of trading, and this kind of applies, I was thinking about how to approach this episode, and, it's kind of just life, right? It's like most of life is toil and hardship, right? Most of life is not that good. Most of life is working towards the good outcomes, but those good outcomes are mostly few and far between. Most of life, most of business, most of trading is hard and not that fun and not very sexy and boring, right? And tedious. So I wanted to talk about that aspect of things. And I've talked about it a bit before on the show, but I wanted to go, I guess just because it's been what I've been doing the last few weeks, which is just what to do when you're in a rut, what to do when you feel like you've stagnated, you're in a down streak, maybe you're getting a little tilted, you're feeling off your game, you're losing some confidence in yourself, whatever, right? What to do and get yourself out of that, since that's what I kind of just did over the last few weeks. And I guess we'll just get right into it. So basically, the first things I did was say, okay, I'm clearly having not making money right now. Right. And I wasn't so much losing so much money because I've been pretty good about keeping things somewhat tight. So I wasn't facing huge drawdowns, but I really was just not making money. I was chopping myself up. I would make some money, lose some money, make some money, lose some money for 2 months straight. And it sucked because I really was bull posting the bottom if you follow me on Twitter, and I was maintaining a bullish outlook, but I really had lost money on the way down. And then I kind of made back what I lost, but then I wasn't like up a ton for being bullish. I got bullish too early, basically, on the downtrend, and that was my first mistake. But overall, it's when you're in a losing streak, what do you do to get yourself out of it? That's what I want to talk about. And you have to ask yourself, one, why am I losing? That's first, right? Am I making bad trades? Or is it that, I'm just unlucky, right? Because ultimately trading is a game of probabilities, right? We are just making probabilistic bets, and the goal is that over time you're net profitable, right? So you're going to have losers and winners, and then in the long run, you're going to generate profits. And so there is times with the case of probability, right? It's like, if you're flipping a coin 50 times, well, there's a good chance that you're going to lose 5, 10 coin flips in a row, right? And that's just unlucky, and it happens, right? And so is it just that your probabilities haven't shifted on the trades you're making? You're still taking good probability trades, risk adjusted, all of that? Or is it that you're making bad trades? You're making mistakes, you're getting sloppy, you're getting loose, you're kind of shooting from the hip and winging it a little bit more than you should, And that's part of just being honest with yourself with trading. And one thing I do that I'm pretty religious about is I record pretty much all of my trades. Sometimes I'll get a little lazy with it, but I pretty much record every single trade I make. And especially when I'm in a funk, I get extremely disciplined about it, because you have to be brutally honest with yourself with trading. There's no lying to yourself with trading. You don't get away with that stuff. Maybe in a raging bull market you'll get away with bullshitting yourself, but in a market like this, there's no bullshitting yourself. You either are making good trades or you're not, and it's going to be very evident in your P&L. And basically, I just wasn't making as many good trades, and I was making a lot of dumb mistakes, a lot of things that I know that I do that, it's kind of like old habits die hard. And it's like we all have our certain bad habits when it comes to trading. And for me, when I get on a losing streak, those bad habits tend to come back up. And the reason for that is that I'm chasing profits because I haven't been profitable, and I want to make money. And so then I start forcing trades, and I start making mistakes and taking, bad trades that I know are kind of gambles, essentially, and they don't pay off, in the hopes of, I just need to make that money back that I lost, right? Or I haven't made money in a month. I need to take a big swing on this and do that, right? And when you start doing those things, those are the bad habits, and that's really how you can go down a bad streak. The thing that I'm good at, I will say, is I'm pretty good at identifying much faster than I used to be in the past, I should say. Still make mistakes, but I'm quicker at identifying when I'm not in a good trading mindset, and when I'm just not making good trades, when I'm making lots of mistakes, when those bad habits are showing up again. And kind of quickly addressing them so that I don't lose a bunch of money, right? Because the worst thing you can do, and I've done this, is you start losing your streak, you're feeling cold, you're not, it's just not hitting, you're like, and then you just start forcing trades and you lose a bunch of money. Because the worst thing you can do is then You know, one thing is giving back gains. Another thing is then eating into your principal, right? And so at the very least, I didn't really eat into principal. I just kind of was giving back gains that I was making earlier in the year. And you never want to do that, but it's not like I'm negative for the year or anything like that. I'm still up decently for the year. I'm just not up nearly as much as I was or should be, right? And so what are the mistakes that I make? And I'm sure a lot of you can relate to these. There's a few common ones. Or I should say, before I get into the mistakes I make, identifying the mistakes you make. That's number one. How do you do that? Well, it's very simple. Record the trades you make. Yeah, it's tedious. Yeah, it's annoying, but you got to do it. It just, every time I slack on recording my trades, I'm a worse trader. I'm telling you, you are a better trader when you record your trades. I have a very simple spreadsheet. Okay. Maybe, I have to like blur stuff out. I mean, maybe I can take a screenshot or something of my spreadsheet and share it, but I keep it super simple. I used to have like more complex stuff. I just keep my spreadsheets super simple. Because I don't like to overcomplicate these things. Because if it's a lot of work to do something, then it's easy to get lazy about it. I try to make it where it's just like I literally enter the ticker and I enter basically the size and then the current value of the trade if I'm in it, and then the profit or loss once I close, right? And that's it. And then I'll write a little note next to it, why I entered the trade, what was my thought process, whatever, if it was a good trade, a bad trade, you know, things like that. Did I lose money on this because it was just unlucky and it was just whatever, it went against me? Or did I lose money on this because it was a bad trade, I had bad information, I had wrong assumptions, it was a gamble, whatever, right? And just being honest with yourself about those things. Because there's trades you lose money on that aren't bad trades, right? And so obviously you have to always have that distinction between, was this a bad trade or was just, you know, hey, nobody bats 100%, right? You know, you're gonna miss a bunch of trades and that happens. It doesn't mean it was a bad trade. It was just mean the probability didn't go your way that time, right? So you have to identify those things. And then journaling. That's something that I got back to. I've done it a lot in the past. And then, you know, you get on a win streak, you start doing well, you start journaling less. And I had lost the habit of journaling. And, you know, as soon as I started losing money and was just in a bad streak, I was like, I need to start journaling again. I need to start reflecting. And it really, really helps. You know, I know some people say, oh, journaling's for losers. I don't know. I don't care what people say. Journaling, when it comes to trading, really, really helps because it makes you like force accountability. The thing with trading is that it's such a solo endeavor. You're ultimately totally responsible for every trade you make, and you're responsible for your profits and losses. And because you don't have anybody to hold accountable or holding you accountable, you have to be really good about holding yourself accountable. And so that's why I'm pretty religious about writing down every single trade, and you know, now getting back to, and I'm gonna really, really make an effort to not, when things go well, get lazy with my journaling, and just writing down, you know, and it's not a lot. Like I literally write down. I don't want to. Maybe I can. I don't know if you guys can. I don't want to like show what I write. But anyways, basically this is it. It's just a little journal, and I just write like a page or two of stuff. Sometimes every day. Not most days I do it. I don't do it every single day, but I do it most days. And I'll just write like one thing I'll show you. Like this was a trade. Okay, I'll just read you. Fuck it. I'll just read you. This was last week, June 26th. Okay. Basically, what happened on this day? What day was this? I'm trying to think. Okay, yeah. The market ripped. Oh, this was the day Arbitrum ripped. Okay. So I was building a big position in Arbitrum because I'm pretty bullish Arbitrum for the long term, and with the EIP 4844 that's coming out, I'll probably talk about that in a future episode. But I'm bullish on that as a catalyst for Arbitrum. They have no unlocks until March next year, and generally I just thought it was bottomed out. Once it lost $1 and then reclaimed it, I was like, okay, this thing looks good. As far as like the downside risk, I think is not too bad. I think the bottom's in on this, and I think it's going to start to trend up for the rest of the year. because it did that classic like airdrop, launch hype, and then just bled out for like 2 months or whatever, 3 months, however long it was bleeding out, and then it found a bottom, and now it's going to start going back up. We've seen that with a bunch of airdrop tokens. It's a very common pattern. So I started building this position in Arbitrum, but then I kind of shook myself out of it. And I closed a bit early, and I was just like, it was just a spot position because this was something I was going to hold. But I've kind of lost the muscle of really holding things through the bear market because, as you know, it's not been very profitable to just buy and hold things, right, over the past year. So I've just been very much pure trade in and out mode. And so I was up a little bit on Arbitrum, and I got cold feet, and I just kind of sold it immediately, even though I said, no, I want to build a big spot position. And then it had a rally after I sold, and I was like, fuck, dude, you told yourself you would hold this spot. You got to commit if you're going to have like these conviction plays to holding this spot. And so since then, I've started rebuilding on dips the Arbitrum position again. Fortunately, this day was actually, I think, the top. It was when it went to like $1.20 something, so it's come back down since then. So it's provided me an entry again. So basically, I wrote on here, ARB ripped, and I didn't have any. Could have stuck with it, but I sold because it was tracking ETH, and ETH was weak. And this was true. This was last week when ETH BTC was just going down, and Arbitrum, if you literally looked on the low time frame, like I was looking on like the 15-minute chart, and it was just directly tracking ETH, right? It was just directly ETH beta. I said, ETH is weak. I don't want to hold ARB, and that's why I sold it. But then Arbitrum had this day where it decorrelated from ETH and went on its own run. And then obviously Ethereum then became strong this week. The other one, big L on Fumo. This one sucked. Fumo is the Milady token with the stuffed doll thing that came out. I was pretty confident in that one. I thought, oh, we have a Milady token now, not just an NFT. It's a Milady token. This is great. It was like 12, 13 million market cap after like the first day, and I thought, oh, this is pretty cheap. The fake ladies token, that was the other Milady token that wasn't made by Milady team at all, went to like 100 something million market cap, and I was like, oh, this thing this is a great play. And I was really confident in it, and man, that thing has just been down only, and that was a big loser for me. And that one sucked, and I should have been more patient with the entry. I had made money on it, and then like sold at like 40 something thousand, and then when it got down to like 35 or something, I started buying lower until finally I just cut it off. And that was a bad trade too. And I wrote on here, FOMO is the mind killer, because so often, you get into things and you just chase them because you're like, you always, at least for me, I'm often like, oh, but what's the upside? I do that a lot of like calculating, okay, if this trade hits, how much money do I make with that? That's just not a good way to go about it, right? You can't be focusing on the upside of every single trade. You have to be just focusing on like, is this a good trade? Am I sized appropriately? Because sometimes there are times to take big swings on trades and size up, but that's pretty rare. If you're like constantly sizing really hard, you're gonna lose money, because most trades you shouldn't be sized for. You should only be really heavily sized for like a few trades a year that are like really high conviction bets, and I was just sizing up on too many things, trying to take too many swings, and this was part of the I want to make it back idea, right? And I realized like I wrote down patience over glory. And what I meant by that is like, I sold Arbitrum because it was like the slow moving boring coin, and then I was taking big swings on other coins that were like, oh, I'll be the fucking hero, if I hit big on this coin. And that's just such a mistake. That's ego trading, that's hero trading. You can't do that. You can't do that, and it's so easy to fall into that, especially when the market's in an uptrend. You're like, oh, if I just swing big on this and hit it, oh, it'll make up for all the other losses and then some, right? You can't do that. You have to like get that out of your brain. And so that was like what I wrote. I wrote FOMO is the mind killer, which is a Dune reference. I actually tweeted the whole little poem from Dune, which is fear is the mind killer. If you've ever read that like little poem, and I just replaced it with FOMO is the mind killer, because it just is. FOMO is the mind killer when it comes to trading. You have to just You need to remove FOMO from your mind. You need to remove it from your life because it is not helping you. It will never help you. You're just going to chase trades. You're just going to chase money, right? You don't want to chase money. You want to make money, right? That is the mindset you need to be in. And it's so easy, especially in crypto with the way things move, to just try to chase money. And you got to get that reflex out of you. It's very hard, but you got to get that reflex out of you. And so that's basically what I wrote. Patience over glory. And I'll write shit big. Like, I'll show you guys. Like, I don't know if I can get it on the camera or not, if it shows. It's kind of not focusing. But basically, I'll write, like, big, like, headlines for myself. Patience over glory. Just grow the stack. Stop swinging for the fences. Less trades, better entries, more wins. Right? Like, that's what I wrote. And you just write shit like that every day because it's common sense and it's nothing groundbreaking. It's nothing you've heard before or you haven't heard before. It's nothing you, like, don't know. It's almost like the journal is to help you just repetition, right? It's like you just need to nail yourself on the core principles over and over and over again, right? And a big thing for me, I'll get into my common mistakes, is what I was going to get into earlier, and I already got into some of them, is when I miss my entry, I chase a lot, and that's the FOMO is the mind killer part. And chasing just almost never works, right? It almost never works. There's rare occasions where it's justified and you have to be really skilled. And there are a few places where I will chase because I know it's like a setup that I like. But that's rare, right? In most cases, chasing is not a good idea, especially in this market. So chasing trades, forcing trades when you haven't, like, say you've had a few bad trades and you're like, oh, I want to make it back. Oh, I'm just going to long this. Oh, I'm just going to, or a lot of people, I don't do this, but I know a lot of people do this. Something will pump really hard and then their reaction is, oh, I missed this. Damn it. I'm just going to short it. That's like brain dead behavior. Do not do that, especially in crypto. So many people get blown out doing that shit. It's crazy to me how much people do that. I personally don't do that because I'm not much of a shorter. That's like, I'm the flip side of, like, I'm like guy who tries to catch the knife and long the bottom 5 times before the bottom's in. So I have the opposite problem. But don't, like, short a pump just because something pumped really hard, right? Like, that's like trading 101. Don't do that bullshit. Patience with entries, patience with holding things, right? And it's hard, right? It's hard because there's always, like, and this is where, like, just skill and experience comes in. It's like there are things that you should hold and there are things that you should just cut and take profit on. And knowing which is which is always difficult. And that just comes with experience. You just learn that over time. But there are a lot of positions, I think, especially now, and I'm going to get into this later, of, like, more of where we're at high time frame and crypto going into the end of this year and into next year. It's probably time to start getting good entries and holding things a bit more, especially with the high time frame trend that we're in. And so anyways, so the point is, I'm not going to list every single mistake, but you get it, right? And you know your mistakes. You'll know, right? I'm sure if you go journal right now, and I highly recommend, if you don't journal, literally, you can do it on your computer, you can do it on a piece of paper, it doesn't matter. Like, just write down, like, what trades you made today. Were they good or bad, right? Reflect. Did you lose money? Why did you lose money? Was it a bad trade? Was it an unlucky trade, or was it genuinely bad? Did you chase in? Were you patient with your entry? Or did you just say, oh, I don't want to wait, I'm just going to get in, right? Like these are all the things that you have to be really honest with yourself about. And when you're honest with yourself, that's when you start getting better. So that's one part of it. And then the other part of it is just the mindset you have to be in. And I was thinking about this a lot in the last couple of weeks of, before I was in crypto, a few years back, I used to basically run, like, e-com businesses and stuff. I used to talk about this. But basically I was in the e-com business. And one of the things that really changed the way I worked back when I was, like, because I dropped out of college to do that when I was, like, 18. And when I started, it was very, like, shoot from the hip. You know, it was like winging it. It was like the side hustle mentality, right? Oh, I'm making some money here and there doing this. And when I started becoming more successful and getting more clients and doing all this stuff was when I stopped thinking of myself as a hustler and thinking of myself as like a businessman, right? I'm running a business, right? I have clients, I have people who work for me, I have processes and systems, you know, and organization, right? And that was when I started making more money, I started closing more clients, I started like automating more things and having it, because when you start it was like literally I would sell the deal. I would, you know, do like all the like the proposals. I would do all the work myself. I would, you know, do the customer service. I was everything in one, right? And that's fine when you start, but then you kind of grow out of that. And when I was finally able to get better as a business person was when I started treating myself as a businessman and acting as a businessman. And you can call this like the fake it till you make it or whatever you want, but I started pretending as if I'm not a one-person company, I'm a 50-person company, because that's what I wanted to be, right? And then I started hiring people, and then I started getting more clients, right? And having more organization and systems and all of that, right? And I was thinking about that with trading, and it's like, it's very easy with trading, especially when you're by yourself. Like I said, you don't have anyone holding you accountable. It's just your money. Like, obviously you want to make money, you don't want to lose, but you're just doing your own thing, right? You're making decisions, you're clicking the buttons. Everything relies on you. But I was thinking about this, and you know, part of what makes you better in everything is you have to be professional. You have to treat what you do and take what you do seriously. And I think what really helps is even if you're just managing your own money, in the same way that I said I started acting as if I was running a 50-person company, even though it was just me in the beginning. You have to act as if you're running a fund, right? Even if it's just your money, you know, you should have the mind state as if I'm a professional, I am running a fund. Okay, even if the fund is just your money, right? Family office, whatever you want to call it, right? You have to treat yourself as a professional, because that's when you take yourself seriously and you start taking your work much more seriously. Because if you're just managing your own money, you shoot from the hip, you know, you just kind of wing it a lot, and we're all guilty of this. But you have to get those habits out, because the way you start being good and being profitable consistently and build your own self-confidence is when you have systems in place. You have a process, right? You know what to look for. You know the trades you take and the trades you don't. You don't fumble into things because, oh, this coin is hot. I don't care. That's not the trade I take. That's not my setup. If other people are making money on that, good for them. That's not my trade, right? You have to have a professionalism of how you go about things. You know, because for example, if you were running a $100 million fund instead of whatever stack you're managing for yourself, but you were taking all the same trades, let's just assume, you know, forget about, you know, scaling issues with all this. But anyways, just you get the idea here. And you had to report every single trade, and you had to make quarterly reports and write investor letters and all this stuff. And you have LPs to report to who have given you money, limited partners, not liquidity providers, if you're not familiar with the vernacular. Right? You have people who have invested in your fund, and you have to report to them what trades you make, right? Well, if you had to report all the trades you made and your thought process for taking trades and all of this, you'd probably think twice before you threw some money in some random meme coin and lost it, right? You'd probably think more about how you sized into trades, right? You would probably gamble a lot less and take higher probability and higher success rate, or maybe not necessarily higher success rate, but more risk adjusted trades, right? If you were managing a bunch of other people's money. And you need to think about it in the same way for yourself. You need to act as a professional, right? You need to catalog your trades and tell yourself, why am I getting into this trade? What's my invalidation? Where do I get out of this? What is my thesis behind this? What is the setup that I'm looking for, right? It depends if it's like a high time frame, thesis trade. Is it a swing trade with a certain setup? You like whatever it may be. You need to catalog these things, and you need to hold yourself responsible for these things in the same way that if you were managing a fund and say you had traders working for you, you would hold those traders responsible for those things. How would you feel if you're managing a fund and you have some trader working for you and he says, "Oh man, I just lost a bunch of money on like chasing a bunch of meme coins"? You'd say, do you have like edge trading those meme coins? Because I'm not saying don't trade meme coins. Obviously, there's a huge amount of money to be made. But do you have an edge? Is there some setup you like? Is there some repeatable track record that you have taking this type of trade, right? Or were you just chasing? Were you just FOMOing into, oh, these coins are hot right now? I bought Pepe 3.0, whatever the latest crap is, right? Because if you have to hold yourself accountable in the same way, like if you had a boss or if you were running a fund, you would hold traders who worked for you accountable, then you're probably going to take a lot less bad trades. And you're probably going to take what you do a lot more seriously. And then you need organization, You need, when I say systems and process and all this, what I mean is you need to get organized. It's so easy to be disorganized in crypto because there's not a lot of professionalism, I think, in this space. And that's one of the things that kind of holds us back as an industry that I think is getting better, but is still not quite there. You need to, I have like spreadsheets for everything. I'm, and you can use whatever you want. It doesn't really matter the tools, but just have like a system. Like for me personally, I use Google Sheets and I use Notion for pretty much everything. I use Google Sheets for a ton of stuff. If I'm writing up, and if you're in the Discord, you'll see like different things. Like I want to run numbers on a protocol, right? Like I did one on GND this week in the Discord, and I just basically went through all their numbers, and I said, this looks like a good trade, and it turned out to be, right? The price of the token was like 340 or something like that, and I said, man, each token is generating in revenue right now after like the protocol is 10 weeks old, like over $300 per token. And they're like actively burning and decreasing the supply. I think these things are really undervalued. And with the current rate of buyback and burns, there's almost no way the token can even stay at like $300 something, right? It's going to have to go to like, $600 plus is what I said in the Discord. And guess what? In just a week, it's gone from like 340 to like 450. And I have that because I have like a spreadsheet where I run through all the numbers, right? And there's a lot of spreadsheets that I don't share because I run the numbers and I'm like, this is a shit protocol. I don't like it, and I track a bunch of new projects. One of the things that I'm trying to do a lot more of now that I got lazy on, again, get lazy when things are going well, is like airdrop farming and keeping track of new stuff that's coming out and all these different protocols and all that, right? And you have to track all these things. You need to have a calendar for when is this launching, because how many times do you miss something just because you forgot it was happening that day, right? That happens to me a lot, and it's a bummer. You shouldn't do that, right? You need to have a calendar of what events are happening this week, right? And that applies to like both like macro whatever events and literally protocol specific things, right? So you need to have a system and process, and whatever that looks like is up to you. You can design it yourself to make it work for you. But you need to have these things because that's what's going to make you more consistent. That's what's going to make you professional. That's what's going to make it so that when you start losing money, you're not worried because you say, I'm just on a little down streak. Things didn't go my way these past few weeks. Whatever. I have my system. I have my process. I can analyze what went wrong, what's going right. I can say, okay, what are the opportunities that are coming up that are going to get me out of this hole, right? You have all these things. It's about taking yourself seriously, And it's like I love that Succession meme. I've posted it a couple times. I'm sure you guys have seen it when Logan Roy, if you haven't seen the show, he's like the father figure and he like has these kids. Anyways, if you haven't seen the show, you wouldn't get it. But anyways, the point is he tells them like they all want to run the company and he's the founder and he's like old and he's deciding who's going to run the company after him, and he just tells them like, I love you kids, but you're not serious people. And It's true. And I look at that with crypto, and I look at that with myself. And you have to be honest with yourself and say, am I a serious person? Do I take what I do seriously? Or am I just an amateur, right? And the difference between an amateur and a professional is really just how you conduct yourself. There's not really much of a difference other than the professional comes in every day and has a list of tasks that he knows he wants to go through. I need to check in on these protocols. I need to check for my setups. I need to have I need to go through my filtering system to see if any trades that I look for are available right now, right? I need to take notes of what I did today and any mistakes. I need to log my trades and say why I took them, right? Versus the amateur just, trades willy-nilly and, oh, I forgot that was happening today, and, oh, I missed that, Because there's so much free money to be made just in, like, being consistent and organized in crypto. It's, like, hilarious, right? And this is, like, obvious stuff. Anybody who, like, works in TradFi would be like, yeah, this is like table stakes, right? This isn't, like, what I'm telling you now is, like, this is, like, bare minimum what you would be doing if you worked in TradFi. But we work in crypto, which is just such an amateur space that people don't talk about this stuff that much. But it's very important to do. And I'm telling you, when I do these things, I make more money and I'm more consistent. And when I fall off because I get lazy or because I'm winning and I feel like, oh, I don't have to do that, I'm making money, things are good, I fall off. And then the only thing that gets me back on is basically getting back to the system or whatever you want to call it. So that's my my spiel for the day on what to do when you're in a rut. Because the thing with a rut is that if you're good and you know how to trade and you have ways of making profits consistently, then ruts shouldn't bother you that much, right? You say, okay, I'm not at the top of my game right now, but we're going to get back to it. But when you're an amateur and you just shoot from the hip all the time, then all of a sudden you have no confidence in yourself to get back on that wagon, right? And so that's the difference. Treat yourself like a professional. Imagine you're running a $100 million fund, right? How would you go about it? You have to report to people whose money you're managing, right? They're going to ask you when you made that stupid trade, why'd you take that trade? So maybe before you take it, you should ask yourself that, right? So that's it. I think you guys get it. I encourage it. Start today, stop the video. I'm going to go into other stuff, but if you stop the video right now and do it, come back later, right? Go write like 1 page of a journal, or go set up like a basic spreadsheet to catalog your trades. Do something basic if you don't already do that stuff. Because I'm telling you, you're just gonna be better if you do that stuff. It's just not even close. It's not even close. And don't listen to these people who say, "Oh, I don't do that." But well, fuck them. I don't care what anybody does. I really don't. Like, that's another thing when you're new, you feel like, oh, I need to be cool. I want to be this like guy who just is like really good and cool. No, fuck that. I want to make money, okay? And maybe there's people out there who can just shoot from the hip their whole lives and just make money. Congratulations to them. Hats off. I'm not that guy, okay? I'm not that guy, pal. I need organization. I need systems. I need processes to think through my trades and analyze my trades and understand the mistakes I'm making and feedback loops and all this stuff, right? And odds are you're that person too, because this isn't just for trading. Like I said, this is for business. This is for life. There's a reason why companies have all these systems and processes, right? Because people work better when they have a checklist and they have an operating procedure, right? And they know what to do and they have to check in with their manager and they get feedback on their performance and all that. There's a reason the whole world operates this way, because you just perform better when you do that shit. And trading is no different. So that's it. Let's move on. Let's get into the market in general. How far are we so far? About almost 40 minutes, just shy. Perfect. Okay, we'll wrap up on the market in general. So long-term thoughts. So like I said at the top of the show, we are in an uptrend. It's very clear. Just look at the weekly, monthly charts. Like, we are clearly in an uptrend now. So the question is obviously, how long will that uptrend last? And the bigger question, which I'm not there yet, and I think that it's too soon to make such a statement, is this, the beginnings of a bull market? I'm not quite there. But it's an earnest question just by the mere fact that we're in a 6-month uptrend. So I think it's not a ridiculous question to ask. But I think that whether it is kind of starting now or not, or if maybe we have one more leg up to wherever, 36, 40, something in that area on Bitcoin, and then pull back down, maybe retest that 25, and then that's the bull or something like that. We don't know. You can't predict these things. But it's time to start thinking we are closer to a bull, to the new bull, than we are to the last one, right? If there's anything I can say with some confidence, is that we are more than halfway there. And so you have to shift your thinking. And this is what I was talking about with, like, one of the mistakes I was making is I'm trying to build more long-term spot positions now. Because the thing with bull markets is you don't know when they're going to happen. You don't know when they're going to start. And so you kind of just have to start positioning beforehand and, letting your positions flow with the wind and flow with the market a bit and be okay sitting in them for a while. So the only tokens that I'm really accumulating so far are obviously ETH, and then Arbitrum are the two that I'm interested. Just because those are tokens that I'm like, well, fairly certain that a year from now, those will both be worth more money than they are today, right? And there's other reasons to hold those two. They're both good for collateral in terms of if I want to borrow against them and I can use them in different DeFi protocols and things like that. But mainly just like, I think that they're like, as far as crypto goes, relatively safe long-term bets, right? Maybe Arbitrum past like March next year. I don't know once the unlocks start. But at least up until March next year, I'm fairly confident Arbitrum will be, worth more than like $1.10 or whatever it's at now. And Ethereum, same thing, right? So you have to start, and there's other coins that I'm interested in, but none that I've like really pulled the trigger on building spot position in. And so you have to start thinking about the spot positions you want to hold, and then kind of more high time frame trades that you're interested in, and slowly, not all at once, not go all in right now, not, take massive risk. Slowly start thinking, okay, if this is the beginning of a bull market, how do I want to start thinking about things? What are the things going into the next bull market? The protocols, the big ideas, the potential narratives that I care about going into this bull market. Okay, actually, I just paused for a minute because I realized I want to go a lot longer on the big picture crypto like ideas, and I probably should just dedicate a whole separate episode to that, since I already went like 40 minutes on the trading part, and I think I should just keep these two separate episodes. So I'm gonna leave you the cliffhanger. Sorry to do that, but I'll make a new episode probably pretty soon. Let's see how the next couple days go, but maybe I'll just make another episode really soon with just that part, because I want to make that separate. It's going to probably take an hour of talking, and I don't want to do another hour of talking after doing 40 minutes of that. So we're going to wrap it up here. Sorry to leave you the cliffhanger like that, but follow me on Twitter at @D_Gilz, GILZ. Follow me on Threads. We're doing Threads now. I'm same thing, DGilz, but with a dot instead of an underscore. Those links are in the description. Well, the Threads one probably isn't, so just search it, D.GILZ. But Twitter's always there. Yeah, that's pretty much it. I'm more active on Twitter. And join the Discord if you would like. Just DM me on Twitter if you want an invite. And that's pretty much it, guys. I will see you next week. Sorry for the abrupt stop. I just kind of realized I was like, oh, I have a lot to talk about, but it's not going to happen in like, because I don't like these to go over an hour. I was like, this is not going to happen in like 15, 20 minutes. So we're going to do another episode shortly, and we're going to keep this one contained. Let me know what you guys think about this one, though. The professionalism, the thinking about how you trade and all of that. Because it's really important, right? It's really important, the mental frameworks of trading. And especially, I think the hard parts and the down parts that a lot of people don't talk about, the less sexy stuff. So, anyways, thanks so much for listening and watching. I will talk to you guys next time. Goodbye.